the important issue of NPLs, non-performing loans, an issue that of course will become particularly relevant. Be interesting to get a sense from you what your thinking is at the moment.
Clearly, pandemic is a massive regime change. This pandemic is obviously, we know, at its core will materialize as a corporate crisis. And of course, it will, with some delay, impact banks. What was discussed, particularly in that round table, was the possible concept of asset management companies. We discussed the possible approach to help securitization, to help the bundling and sale of non-performing loan by banks. And finally, we discussed more broadly the conundrum of secondary markets. We discussed issues like information, data, and data templates, harmonization to foster transparency and comparability in markets. Linked to that, possible data repositories. And we discussed the possible usefulness of platforms for NPLs.
Something that came through clearly from the round table was the fact that we may see fairly heterogeneous NPL types reflecting different structural impacts of different economies across Europe. There is a heavy degree of uncertainty around precisely what the timing and overall scale of NPLs is going to look like.
The figures we have seen is that COVID-related exposures, and by COVID-related exposures I mean the additional lending that has been carried out by the banking system since February, March, more or less, including all the moratorias, all the government-backed schemes, plus additional lending by the banks, equal in size the amount of stage 2 and stage 3 assets in the banking system in Spain, for example. The size of the problem is quite scary. So that's the first thing. And then the second element is the nature of the assets. And one very important point is that we will be talking about NPLs of SMEs. On the question about the differences or the merits of an EU AMC versus a network of AMCs or national AMCs, the first element to bear in mind is that this is not a national problem.
Now we have a global platform that did last year transactions of over $1.5 trillion and over 1.5 million transactions. And we think this is the approach that the ECB and the European Commission can help drive in the NPL space in Europe. And it's also, use that to tap into global liquidity.
We are very well aware that it will be a very tricky and a very difficult path to sort of exit the current policies on EU AMCs, system-wide AMCs, national or European or wherever, have a clear benefit and a clear advantage over other solutions if the assets possibly to be transferred to the AMC are not too heterogeneous.
The challenge we have, and the reason why I suspect there are not other banks looking at the same activity at this point in time, is the treatment of loss provisions under the capital requirements in Europe at the moment, which doesn't distinguish between those NPLs that you have that were on your banking book, where you originated a loan and it's not giving the return anymore that was expected, versus where you have bought a distressed debt and are holding it on your trading book or are working it out from a position where you understood exactly what you were buying and were assessing what you thought the return was going to be. So we need to make sure that we've got the broader prudential framework calibrated effectively to ensure we don't disincentivize or prevent private sector capital that otherwise might be deployed to help support work through this issue from within Europe itself. It's really important when we're looking at the design of AMCs, whether that's at a national or a European level, to ensure that there is private sector expertise being hardwired into the structure of those companies, that the experience, understanding of how to how to work out how to effectively price non-performing exposures. That's something you should be able to get from the market, the NPL securitization market in Europe, which at the moment is, I think, underdeveloped.
I mean, on AMCs, I recognise it's difficult to do EU-wide AMCs, but I think a national approach is not the optimal outcome. I think you also need to think about the incentives on the AMCs. I haven't heard anything about, in effect, you need an AMC to want to get itself out of a job, and it needs to be working to offload its positions. But it also you need to be careful that it doesn't displace the private sector buyers. You don't need legislation for this. With more standardization, you get a much better market. And actually, we have seen enormous amounts of cross-border liquidity being developed in Europe using processes developed by the LMA to encourage that. They've tested contractual provisions.
What is the link between this NPL initiative and banking union and what we've heard a lot from the ECB, the question around bank consolidation?
Bank consolidation is part of the solution. I'm not so sure whether the NPL pressure, which will rise on its own, I hope actually that it will not have a sufficient enough momentum to on its own unleash such wave of market exit and consolidation.